Hello friends, this is Leo again and welcome to the module 7, and we are going to combine the module 7 and module 8 into one video. This is more of a theory, but don't skip it. This is extremely important as like strategies. Okay, but before that, let's look into the module 6 real quick, where we have so far talked about the intraday strategies, right? And we're going to cover some of the swing strategies and also the long-term investments. Okay, I will show you some examples, and then we will dive into the module 7 and module 8 in a single video. Okay, so now let's take a look at the weekly strategy. So we have so far seen the intraday strategies, right? And we're going to look at the swing strategies, and also somebody would be interested in looking at an investment opportunity in the stocks. Okay, and we're going to look at that as well in a real quick fashion. Okay, let me switch it back to 30 minutes. Okay, and I'm going to disable the VWAP. VWAP is not required on this swing strategy. Okay, so before that, the way that this chart has been built is, for example, if you look at the 5-minute, it will show you the daily time frame. Up to 29th minute, it will show you the daily time frame. If you switch it back to the 30-minute, it will show you the weekly time frame, and till up to 2 hours. Okay? So if you go back and click on the 2 hours slot, 2-hour time frame, you will look at the monthly CPR in the monthly pivot levels. Okay, and so let's take a look at the swing strategies. Okay? So let's look at something here. Okay, so some of the strategies in the swing. Okay, so if you look at this, for example, this is an a weekly CPR. Okay, this is a weekly CPR, and this is a weekly Camarilla pivots. Okay, and if you see this is opening above the H3. H3 is a breakout level, right? And it was trading around this level for a while, and it gave a breakout, and it went and hit the H4 level, right? And similarly, if you look at this from the standard pivots point of view, it opened above the it stayed closed above the standard pivots, S1, R1, right? And it has broken the R2 also. Okay, so this is also an important concept. We can use it for a swing strategy. People do not have time to look at the screen every day, and there are some players who would do only the swing strategies, right? And this is something that is going to be very useful. And we can see many strategies like this, from the swing point of view also, right? Look at this, opening almost at the CPR, because it's a narrow CPR as well compared to the previous day CPR, right? Market was struggling at initial 2 days, right? Initial 1 day, and then it gave a good trending run, right? And this is on the stronger side, right? And we'll look at some of the side on the reversal also, right? So market has opened in this day. If you look at it, market has opened below the CPR, and you can see this, the levels. H3 is actually typically matching with the central pivot, right? It came all the way down, tested the L3 level, right? And then also tested the S1 level, and then bounced back to this level, right? And if you look at this, the moment it crosses, okay, it has done some, sideways move here, but it never, closed below this H3 level, right? The moment it crossed the H3 level, it went and hit the H4 level, and similarly, it also went all the way up to previous week high. Okay, you can look at this. Okay? So this is an opportunity for people who's going to look at the swing trading concepts, right? Another example, opening below the L3, right? It went all the way down. Okay, so there are many examples we can see like this. Okay, let's take a look at some of the examples on the charts also. Let's say HDFC, for example, right? So you can see the HDFC here, right, taking a support at this Camarilla pivot and then moving towards it. Okay, and this is an a reversal trade, right? And if you look at the next week's trade, you can see that market has opened above, right, the H3 level, H4 level rather, right, and it went and hit the H5 level, and it also hit the standard pivots S2 level. So there are many ways we can look at it, right? People who are very interested in looking at the swing strategies, right? They can use this even for stocks, okay? And let me show you that it will also work on the crude, for example. So crude is usually like, it's an I use a 1 hour chart on the crude for a swing trade. So if you look at this level, I've taken a support and then it moved high. So there are many examples. So this is not just only an intraday tool, okay? And it will work on multiple time frames. That's what I want to show it here. And let's look at this example, right? Fantastic, right? It has narrow CPR. We know it is going to be a trending day. So we're waiting for some level of a breakout. And it is very hard to design because the previous week CPR is a little wide CPR. And this particular CPR is an inside CPR, right? We call it as an inside CPR. I have not covered those topics because we have covered it in a different way, right? So if you look at this is a white CPR and this is an inside CPR, right? So it is going to be looking for some kind of an expansion, right? If you look at this, it gave a very good move from all the way up to 5400 and all the way up to 4850 level. Okay, so this is a very, very powerful tool that if you know how to use it and how to read the charts. Okay, and so let's go back and look at the module 7 now. Okay, but before that, let's also look at the monthly structure, right? So let's say that we are looking at uh, let's say Titan, for example, right? I'm just picking some random examples. Okay. So if you look at this Titan, right, you can see this, if somebody want to invest in the equities who are not comfortable in trading, okay, they can utilize this CPR again. And if you look at this, market is, this is a CPR, okay, and the CPR central pivot is exactly matching the L3 level. So we were waiting for a bounce. So we were waiting for a bounce or a breakout. Okay, if it breaks out, it will go and hit the L4 or even in S1 and those areas, right? But in this case, it has closed above this CPR, right? And this is a good place to enter at 32, 33, 20 level. And within a week's time, we would have got about 300 points, okay, which is like a 10%, almost equal to 10%, right? And you can do this on equity also. And let's take a look at some of the examples. Maybe Reliance, for example, one of the favorite stocks of many people, right? So if you look at this was an inside. I mean, this CPR and this CPR, right? This is pretty close to it, right? And market has come down. And keep in mind the previous week's support and resistance also act as an important zone, right? So in this case, right, it did not touch the L5 level, right, but it gave a bounce back from the previous week's S2 level, right? This is the previous week S2 level. Okay, if you see that, this is the previous week's S2 level. Okay, so keep that in mind while you take these trades, right? The moment it closed above, this level, you can see this level, right? This is a good entry point, right? To hit all the way up to H3 level or even more, right? So this is an H3, L3 level. Taking a trader's level would also lead to H3 level, which is from 1240 all the way up to 1320, 100 points in Reliance, which is almost like probably 8 to 7 to 8% in a week's time, right? Which is a very good return. So there are many examples we can show. Okay. Now let's go back and look at the module 7. Okay. So module 7 is about trading plan, journaling, and risk management. Okay. So no matter how much you learn about the technical indicators, no matter how much you learn about the strategies, a trading plan is a very, very important component if you want to become a successful trader. Okay. So we know that how to use the trade, I mean pivots, CPRs, VWAP, and let's put a solid trading plan for it, right? Your plan should define the rules of engagement, meaning when to exit, when to enter, when to size up, which is, we call this a pyramiding, right? Increasing the position size, or when you have to cut down your position size. For example, S1 to S2, right? You're taking a position at S1. Your target is S3, for example. When it comes to S2, you cut down half the positions and leave the remaining to the market to hit the S3 level, right? So this is the kind of rules of engagement you have to play, right? And technically, without any plan, your trading is becoming guesswork. So we have discussed about the indicators. We have seen some examples. Now we have got a plan, right? If the moment we enter a trade, we would have a plan now. Okay, this is a CPR, this is a S1, R1, and all those things that we discussed before. Now we should have a plan in place before we get into the trade, right? So never do any guesswork, because guesswork never works. Okay. So once we have this clarity in the structure, and it gives a lot of confidence. Okay. Always remember, consistency begins with a plan, not the perfect indicator. No matter how many times we read this indicator, no matter how many times we have seen all the strategies, right? It really doesn't matter unless otherwise, if we don't have a proper trading. Okay? And I strictly follow this. And this is one of the reasons that, for me to be more successful in trading, right? Now, position sizing techniques. Okay. So this is your risk control wall. Okay. There are too many ways to trade. You could have a fixed lot size, or you could have a fixed capital percentage, or probably, you would have a volatility based, right? So the way that, people trade is, based on their capital, right? They may want to risk 1 or 2% of capital, right? And the same capital would reduce when there is a volatility base, because we are looking for a sideways market, right? So it all depends upon the market structure at the end of the day. One has to plan, their way of, taking this into considerations, right? Not my strategy would work for, your strategy, right? And because my capital could be different than, and my trading side could be different than yours, right? So it all depends upon the individual's capacity, right? But the most effective method is never risk more than 2% in a single trade. Okay, as an example, if your stop loss 20 points and if your capital is 1 lakh, right, you should know how many lots you can trade safe, right? That's the way that we should, look at the uh, lot sizes. Okay, so the proper sizing ensures one bad trade does not wipe out days of profit. So this is very key. I have spoken to a lot of people. All they say is, they were making money like 5-6 days in a, in a stretch, and one day they lose all the money, right? This all relates to the proper sizing, right? You don't need to be in that situation unless otherwise you manage your risk properly, right? This will never happen to you. Okay, and this is with a more traders, and I have spoken to many people, and everybody says the same thing. I was profitable for the last 6-7 days, and 8th day, one bad trade, their entire profit is gone. Okay, and just try to avoid those mistakes. Now let's talk about the risk reward and the win rate optimization. Okay, so all right, now I have got the lot size. I have defined my risk, right? And what is the reward that I should be looking at? Okay, technically, you should have at least 1:2 risk reward. Meaning, if you're risking 10 points, you should have a reward of 20 points. Okay, that is 1:2. So in this case, even if your success rate is only 40%, you still be profitable because your risk reward is the strategy here, right? Your risk reward will be more favorable to you, even if you have only 40% of success rate. Whatever the methods we have seen before, right? We can confidently tell that our success rate is going to be above 60 to 70%. Okay? And that is another reason that I use the order flow on top of it to increase my edge. Okay, so hence the way that I look at the trade, I would be looking at least winning 7 trades out of 10 trades. Okay, 3 trades would technically go into a wrong trades, which is acceptable for me at least, right? But the risk should be very low when you lose those trades. Okay, so it is important to know that you have to manage your risk very properly, and also look at the win rate optimization, which is nothing but the reward, right? So let's for example, right? So when you're looking at a CPR, right, and if you know that you are in a narrow CPR day, so the probability of winning the trade is huge the moment you get the right direction. And the second is the probability of win rate is more, and your risk reward is also more, right? Risking 20 points, you can even capture 80 points, right? So your risk reward would be 1:4, right? That's one of the reasons that I always tell people that do not have a fixed stop loss. Okay, always trail your stop loss, which is always better in my opinion, right? And I do that, but there are days I do have a fixed points that I want to capture. All it depends upon my risk. Okay, so when you have this kind of a setup, right, you could be more profitable, right? And you could be in a different league altogether. Okay, so try to avoid 1:1:5 risk reward unless you are scalping with the high positions. For example, when we talk about the Camarilla pivots, right, the moment we know it's going to break out, we can surely say that 80% of the time it works, right? So that time, we would have a 1:1.5 risk reward. Otherwise, it's not going to be favorable in a long term. Okay? Now, what is a daily trading checklist? So successful traders follow a daily routine, right? And if you have my YouTube live, my way of looking at things is very simple, right? I look at the structure in the volume profile and also in the market profile, which is not covered in this education, and that's a different subject altogether. But I don't follow that completely, but I look at the important zones on the volume profile and also the market profile. So that is one thing, right? Then I always come back and look at the price action charts, which is nothing but CPR and the pivot zones. Okay, and then I go into the order flow chart. So this is my routine, right? So when I do that, I know how the structure is looking like and how the pivot point has been positioned, right? And then I look at the order flow and look at the order that is coming in into the screen, right? So that gives an edge in terms of manage my trade. All this is all well planned and prepared before the day starts. Okay, and this is what I look for, and this is how I do the trade. And if you have not joined my live program, please join and you will understand that what I'm talking about, right? So the important questions is, have you marked CPR? Do you know where is the VWAP? Do you know what is the pivot zones, right? In addition to it, I also look at the valley area high, valley area low, and the profile POCs, right? And then in the previous day, was there any kind of a stack imbalances, right? Where the buyers or sellers were aggressive at a particular zone. And I kind of know all those levels, and that is one of the these are the preparations that I do before I get into any kind of a trade, right? And this is one of the daily trading checklist, right? And obviously we talk about the risk, and what's the overall plan for the day. Okay, so don't treat trading like an gamble. Trading is like any other business, so you need to be prepared before you punch in any order. Okay? Do not just put any order unless otherwise you know what risk you are taking and what is your reward that you're looking for. If you don't know, then that means you're gambling, and that's a sure way to lose them. Okay? Now, journaling, right? So, journaling is technically a feedback loop. It is not about just recording wins and losses. Okay? It is understanding your behavior and edge. In trading, psychology plays a major role, right? Either the fear of missing out, we call it as a FOMO, or the greediness come into play, right? So unless otherwise you make a note of all these things in your trading journal, right, you would never improve in your trading, right? So these are some of the examples I have given, like include these into your trading journals. For example, date, instrument, exit and entry, what you planned and what you got actually, and write out why you took this trade, right? And how it played out. Did it follow your logic, right? And how that played out, right? And then also probably take a screenshot with some kind of a technical reasoning, right? So when you start doing that, right, and take a package of Word or anything like that, just start pasting those screenshots, and over a period of time, when you look back all those things, right, after months time, you would know that, okay, I have made these mistakes at this level and all those, that gives a lot of feedbacks to you, right? So technically journaling is your feedback loop, right? And I would highly recommend you start doing this. Otherwise, you're not taking trading as a serious business. Some people do a weekly review, some people do a monthly review, and I do weekly review also sometimes, right? So end every week with the review sessions, right? Prints and screenshots of your trades. Look at those patterns. Are you respecting your stop loss? Are you with a winning strategy, right? Are you, into kind of any kind of an emotional trades when you take at those levels, and grade yourself, right? If you made a good trade and it followed all your principles, then you make it as a high grade, like A plus setups, right? And there are anything that you have not, you did not respect all of these, points, make it as a B grade, right? And also write down these could have been avoided, right? This habit will lead to rapid improvement, even more than live trading sometimes. Okay. And some of the common mistakes to avoid. I know that everybody, makes mistakes. Nobody is perfect, but there are some things which we can avoid, and these are some of the things which can be avoided, which could cost you big. Okay. Never do over trading. Don't chase trading. Okay, that's what it means. And then never try to average on your losses. If you hit the stop loss, you are done. Period. No questions, right? Don't even try to average it and look for an big profit. Most of the times it won't happen. It end up in increasing your losses, right? Also ask, are you ignoring the CPR, VWAP bias, or whatever the technical analysis that you follow, right? Since this is a CPR class, and we're going to say that, okay, are we ignoring the CPR before we take any trades? Are we all those kind of strategies that we looked at it, right? And usually I don't look at the news events, but it is also important to see if there are new news events, anything bigger, like for example, like the recent India Pakistan challenges, right? And we talked about in this news event in the trading group, and I was very light during those days, right? My trading size is very less, and I was almost trading very less during those days, because any news would react, right? So when we follow the technical analysis, it is not mandatory that we need to follow the news, but it is good to know some major news. Okay, like for example, RBI events, right? And war kind of situations. Okay, those kind of things, right? Just be aware of it and know that there's such a thing is happening, so that you can be prepared, right? And never do a revenge trade. Okay, I lost this money this day. I'm going to take a revenge trade and then I'm going to recover that money. I'll tell you that will lead to more losses. Okay? At least these are 5 things that I could think of. Right, there could be many, but this is just a glance of how you should avoid those kind of mistakes. Right, at the end, the real edge comes is your discipline. Right, if you're not disciplined enough in the trading, you're not going to win the game. Right, discipline is the real edge. Okay, so keep that in. So to summarize, you should have a clear plan. Size your trades using the 2% rule. Always aim for solid risk reward setups. Okay? Journal and review trades weekly. And mastering these habits will transform your trading journey. Okay. Now let's move on to the final module, and let's see how we can put all these things together into the real world applications. So this is a module 8, live market application. So pre-planning using pivots, we got to do a pre-planning, pre-market preparation rather, right? Which brings a lot of clarity. Mark your CPR, VWAP, classic pivots, Camarilla pivots on your charts. Of course, you don't have to worry about it, because these are all already marked in your chart, right? And use the previous day trend, analyze it, understand what the price behaviors are, around those pivots to establish your initial bias. Okay, and be prepared. Right? Was it an range bound day yesterday? Are you looking for a trending day, meaning the CPR is going to be very small, narrow, or is going to be an yesterday was a trending day, hence we would expect and kind of a sideways range today, right? Because the VPR CPR is going to be even more bigger today, right? So those kind of things, right? Prepare all your things, right, before you punch in any trades. So keep your eyes on the price action near the predefined levels. And once you're doing the preparation, right, and the market opens, and look out for the price rejection with the CPR with the volume. This could be a potential reversal, right? And is the VWAP acting as a launch pad during a pullback? That's a possible continuation, right? So these are things you have learned before, right? So when you combine this all, right, with the candlestick confirmation and volume, you get a perfect entry, right? This is where you have to apply the theory, what you have learned so far, into an execution, right? So, okay, we have a view, right? Now, should we stick to the view? Not necessarily, right? You have to, because market is dynamic, right? Market bias is not static, right? And so you should never be having a static mindset. We are going to react to the price action, right? So always be flexible in your mindset, right? If the market is in a trending day and suddenly reverse for some reason, accept that, and then just cut your profits to the to save your capital, right? So some of the things is like is the price was trending up in the morning but started consolidating or reversing near R3 or Camarilla H4, then it's time for you to adjust your expectations, right? VWAP and CPR shifts, right? Are we, is the VWAP is changing something, right? It's a big volume coming at the middle of the day, wherein it is changing the trend of the VWAP, right? So calculate all those things, right? Do not stick blindly into your bias, which is a very dangerous thing to do, right? And you got to be more flexible, and that's what makes the professionals profitable, right? Otherwise, we'll be in a trouble, right? Now, exit management with pivots. Okay. Now we most of the times we always talk about the entry, but a lot of things we don't talk about the exit strategy, right? So if you don't know your exit strategy, then you do not know how to make money, right? So always have a defined exit strategy. I use a trailing stop loss. If you are a new person, right, into the trading, then probably you have a fixed targets initially, and then slowly migrate towards the dynamic targets, right? So some of the examples we have seen it already, right? And also watch the price behavior at key levels, probably reversal candle pivots, or your cue to book profits or tighten your stops, right? So let the market earn the next pivot level. Don't just hope it gets there, right? That's the way it should be. Okay? Your learning curve sharpens after the market closes, post market report that we talk about, right? When the market is over, go back and analyze all the factors. Like, for example, did price respect your levels? Did you execute your trading plan? Were your entries justified or emotional, right? And have you taken screenshots? Have you marked reasons for entry and exit? And tag strategies, what are the trades you take on a particular day? This is a daily review process, right? And it might look noisy in the initial few days, right? The moment you start doing it, then it becomes easier for you, and you will easily spot all the mistakes you make, which helps you to refine your trading journey. Okay? So we talked about this daily log structure. So have that, record the instrument, entry, stop, target, actual result, and more importantly, your thought process. So this is a psychology game. You got to make sure that you write down those things of how you felt when you take the trade. Are you in a fearful mode? Are you confident, right? Are you not sure about whether the trade is going to work or not? Write down all those emotions, okay? And track the trade, right? Whether the CPR breakout or kind of a VWAP confluence, right? Along the CPR or a camera reversal, right? Write down all those things, right? This data will tell you, right, what strategy will work best for you over a period of time. And you can, the beauty is that this market is not going to change. It has been like this for the 100+ years, right? So if you find one strategy that works for you, it is going to work for you for the rest of them, right? So the key is identifying what really works for you, okay? And you can arrive at those things only if you look at all the trading logs you write every day, right? Always keep in mind, if you are a data-driven guy, right, your growth will be much faster and smarter, right? And I'm a data-driven guy, right? I look at the data and I trade accordingly. And so hence, you would keep your emotions, your fear, everything away from the system, right? So if you drive based on the data, and you can get smarter and faster, you will grow faster and become smarter over a period, right? And of course, the trade tracking dashboard sample, right? I don't have one, but you can Google it. You can find out something that is suitable for you. Use Excel or Google Sheet, track metrics like win rate based strategy, risk reward ratio, the best and the worst days, right? CPR type performance. And if you make a note of this, this will give you a visual dashboard which gives a complete 360-degree view of your progress. Okay, and you will know where to double down and where to avoid, right? This is the more important thing, right? And you have some clarity, right? Okay, let's wrap it up. So with this, we are completing this course, which we have defined specifically for the Indian market. Now that you have learned the complete framework from pivots and the VWAP to price action and the real-time executions, right? And if you want to trade smarter with us in real time, join a YouTube live channel. And this is a growing community. This has been less than a year old, but we are growing very fast. Okay? And where I come in and I discuss about the observations I make in the live trading room. Right? Mastering pivots is not about memorizing levels. It is about reading the market context around them. Right? And if you find this module valuable, don't forget to like, subscribe, and share the video. Right? The real growth starts from here with practice, feedback, and refinement. Okay? And I will see you inside the community. Thank you. Jai Hind. Bye bye.